Yes. CA Ravi Kumar Patwa sir, in absentia, Vice Chairman, Internal Audit Standards Board, ICAI. CA Chandrasekhar Chitale sir, Central Council Member and Chairman, Internal Audit Standards Boards, ICAI. At our today's esteemed speaker, CA Kavaljit Kaur Soni Madam, all the officials from Internal Audit Standards Board, and all dear participants, we welcome you all for today's webinar on role of internal auditors in fraud detection and prevention. Before we move on to the technical session, I would request CA Chandrasekhar Chitale sir, Chairman, Internal Audit Standards Board, ICAI, to give his opening remarks and words of wisdom. Over to you, sir.
Well, thank you and good evening for this webinar where expert in the field of internal audit, Kavaljit Kaur, is addressing the participants. Ahead of that, let me tell you a couple of developments at the board. Firstly, about the internal audit standards. This year, at the beginning of the term, the board took a view that all the internal audit standards need to be revised to walk with the time and maybe to walk ahead. So all the standards have been revised, and now 21 standards were approved in last month by the board, and they have been sent for public exposure. You will find them on the website of the Internal Audit Standards Board. So it is believed that the wisdom doesn't lie only within the board, but maybe there are various experts in the field of internal audit. If they go through the standards and point out the improvements, inputs in these particular standards, they are welcome. So please take time out from your schedule and go through those standards. And wherever you find value addition can be made, the board will welcome your suggestions, because each and every suggestion will be placed before the forthcoming board meeting, and then the standards will be finalized. Concurrent audit of banks. As far as Reserve Bank of India is concerned, concurrent and internal audit of banks have been made mandatory by the Reserve Bank. Finance being vulnerable to frauds and other misappropriation and such other things. Reserve Bank of India is very skeptical as far as the internal audit of banks is concerned, and it runs throughout the year. So this background material on concurrent and internal audit of banks has also been updated, and that is also placed for consideration of members. So there also, those who are in the field of bank audit, if they find it practically relevant, we are happy. But if they find that something more can be done to make it more practically useful, their suggestions will certainly will appreciate. So as far as internal audit is concerned, there is one more significant aspect, and that is the definition of internal audit. Because, traditionally, internal audit was supposed to be checking of vouchers, evidences, and then maybe finding the gaps, passing rectification entries. And now it has been moved to really these elementary aspects being taken over by internal control. And really the compliance with the systems control is being examined. The risk exposure is being measured, and more focus area is based on where there is more exposure of risk. But going forward, even guidance and advice to the management is expected function of an internal audit. And that is for a simple reason that if you look at the other functional heads, like for production, for marketing, for sourcing, for HR, they work in silos. They don't have macro perspective of the organization as a whole. So internal audit is one uniquely positioned that they take a view of the entire organization, from the sales till sourcing. All departments are under internal audit. So they develop a flair of knowledge in respect of each area. Managements also expect that if there are certain external developments and if they are impacting the organization, how the organization will be impacted, how the recourse to other measures should be taken. Like recently in US, the tariffs have been imposed. Then penal tariff are imposed for the purpose of human resource. The fees on visa have been substantially stepped up. So all these aspects may be uh, not only in IT industry as far as this human resources concerned, maybe IT industry, knowledge processing industry, KPOs would be more impacted. But for other tariffs, etc., even manufacturing industries are impacted. So internal audit should also be external focused and be in a position to advise the management. That is the expectation of the these days. So in line with the public expectation, the stakeholder expectation, the board is also trying to rewrite the definition of internal audit. So in this behalf, maybe uh, what definition should be there, the thoughts are also welcome. Coming to today's topic, as far as statutory audit is concerned, there may be two views, whether detection of fraud is the responsibility of statutory auditor or otherwise. But then as far as internal audit is concerned, internal audit is menu driven. So wherever instances of fraud are noticed, maybe internal audit is also placed in order. And managements may also expect detection of frauds, moreover prevention thereof, by apprehending the area which are susceptible to fraud. So this entire arena would the protect assets of the organization, the leakages in revenue, and therefore the management would have legitimate expectations from internal audit division in this behalf. We are fortunate to have Kamaljit, who is studied in this particular arena, had a deep dive, and also has carried out such assignments, I'm told. So welcome, Kamaljit, and I'm sure that your presentation will certainly enrich the knowledge of our participants as far as this area of internal audit is concerned. Thank you, Kamaljit, for joining us, and thank you.
So,
Over to you, madam. Thank you.
thank
Uh,
you.
Thank you so much, sir, for various updates at ISB and sharing the thoughts and the insightful knowledge about the overall topic. So before we move on to the technical session, I would like to briefly introduce CA Kawaljit Kaur Soni Madam, today's eminent faculty for today's webinar. Uh, she is currently the president of Global Association of Forensic Accountants, GAFA. She is also a certified fraud examiner, international forensic investigator, and of course, a fellow member of Institute of Chartered Accountants of India. She is having more than 20 years of impactful experience in the field of forensic auditing, for fraud investigation, finance, cybersecurity, and a deep domain knowledge with a passion for innovation. As a president of GAFA, she leads the global initiative in forensic accounting, AI-driven fraud prevention, and professional skill development. Her leadership extends through strategic roles with organizations such as PhD Chamber of Commerce, MSME India Forum, Community Director at ACFCS India, and Center for Audit Quality, ICAI. She is also a certified trainer who has delivered specialized forensic and fraud prevention sessions for top layer clients, including law enforcement, banks, industries, and B schools like IIMs. She is a recognized voice in the industry and honored as a Woman Leader of the Year by Business World in 2025, and featured publications highlighting her advocacy for proactive technology-enabled fraud control. She is frequently invited to speak at national and international forums on fraud resilience, responsible AI, and leadership accountability in risk. So it's indeed our pleasure, ma'am, to have you for this webinar, the role of internal auditor in fraud prevention and detection. Before we move on, it's indeed a very complex topic, and and we are very sure that we'll have a very insightful session on this. So over to you, madam.
Thank you so much. Thank you so much for having me once again. It's always a pleasure to connect with ICI and share the knowledge whatever I have. So I'll just briefly share some pointers in the form of PPT as well. So today, the topic which I would like to discuss is what is the role of internal auditors when it comes to fraud prevention or fraud detection. But before we deep dive into this concept, first let's understand what is fraud. The line between fraud and error is very, very thin. Technically, if we define what is fraud, the fraud is any act where the malicious intent is involved, whereas error is something where that intent is missing. So technically, the definition says the difference between fraud and error is the malicious intent. But it sounds pretty straightforward on paper, but when it comes to on ground application of this, it's not so straight. Let's take a day-to-day example. All of us work in companies. At some point of time, we pick up the pen from office and take home, or we use office printers, scanner for our personal purpose. How many of us actually believe that this is a fraud? Probably never. Rarely anybody would feel that they have done a fraud today. But technically, this is called asset misappropriation. And asset misappropriation is world's most frequently done corporate fraud. Sounds so small, sounds so day-to-day activity, but still it's a fraud. So the first thing which we have to keep in our mind, that as an auditor, when we do audit, we follow the concept of materiality, and most of the time our materiality is linked to the monetary limit. But if you ask me, the real definition of materiality is not any item which is big value item. Materiality means anything which has potential to impact the decision of user, anything which can impact the user in a significant way is material. Each time we do audit, we pick up those items which are, let's say, over X percentage of turnover and so forth. Each time we do fraud investigation, we have to understand that smallest amount of fraud also could be material. Let me give you another practical example. In most of the companies, there is a policy that, let's say, if there are some kind of variances or differences up to say 5,000 rupees, etc., we are not going to investigate it. The logic could be that our resources are much more expensive than this 5,000 rupees. So technically it makes sense. Company could be $1 million company, $1 billion company. 5,000 is such a small amount. But what would be the message which employees will take home? The perceived message employee will take it, as long as the fraud is 5,000 or less, company is okay with that. Though company never meant such thing, but that is what the perception goes. If a company cannot stop 5,000 rupees fraud, company cannot stop 50,000, 5 lakh, 5 crore or 50 crore fraud as well. Because more than money, fraud is a mindset, intent. Before the fraud comes on paper, fraud is actually cooked in mind. There are some old theories on fraud which says that, which we used to believe, that people who have less intellectual development commit more crime or commit more frauds. But if you look at today's scenario, the corporate fraud, we will strongly disagree. A very highly intellectual people, very senior in hierarchy, very qualified people, they commit very smart level of fraud. So fraud, end of the day, is more about mindset. The first difference between fraud and audit is that we have to forget the money involved in fraud. if there is an intent, if there is anything related to fraud, it should be investigated and it should be prevented at that stage itself before it becomes too big for an organization to handle. Correct? Now, coming back to this, what is fraud? Fraud is any act where the person is aware what he or she is doing wrong and still doing it. That is what we call fraud. The difference between fraud and error is that in fraud, the malicious intent is involved. In error, this intent is not there. Correct? So that is the difference between fraud and error. There are numerous examples, numerous frauds we see here day in, day out. Some of the infamous bank-related fraud involving Nirav Modi's case, Kingfisher's case. If we look at corporate side, then somewhere in 1990s, we have all heard about Enron's fraud. Then we had our own Enron in the form of Satyam in India. And then I think almost very regularly we are able to get those information from the market where the corporate frauds happen. With all this, a bigger question arises as to what is the role of auditors? Now, I'll start with the role of auditors from statutory auditors' point of view to begin with, and then, of course, we'll come back to internal auditors' role. Enron came into light back in 1990. Till date, Enron is considered to be one of the biggest corporate fraud of history. Back then, the fraud's amount involved was close to $60 billion back in 1990s. In such a big company, Enron was huge, a very diversified company. The auditors were equally big. Do you know who were the auditors of Enron? Arthur Andersen, considered to be, I think, one of the biggest accounting firm of the world. Where is Arthur Andersen today? Nowhere. What happened to them? They choose to support management in wrongdoing. Practically, I think it is close to impossible that auditors would not know if financial fraud is being cooked. I'll take another quick example, which all of us as a CA would correlate. A small concept called going concern. A going concern concept says that company will be there forever. And if company shows any sign that they may not be able to survive in future, auditors are supposed to comment. We are all aware that as an auditor, in audit report, every year auditors write whether the company will be able to follow going concern or not. If that's the case, then without naming, there are some recent corporate cases where the companies have declared insolvency kind of overnight. The bigger question arises as to how company went bankrupt just like that. It doesn't happen this way, correct? We all agree on this. There would be always a trend. Profits declining, sales going downward, assets are being sold. Why auditors are not able to see that? And this doesn't happen overnight, correct? That always has a pattern, year on year, month on month. Then in those big cases, auditors never said that the company will not be able to follow going concern. One, they were too negligent to look at it. Second, they were supporting the management with that. Either cases, we as an auditor have failed, whether it was deliberate or whether it was a negligence. This role is not restricted and limited to statutory auditor. Even internal auditors have a very, very big role when it comes to fraud detection and fraud prevention. It is never the primary responsibility of auditor to detect the fraud or prevent the fraud. But it does not mean that it is not the responsibility of auditor to do it. Long back when I did my CA, and I'm sure it must be still there, we used to have a question on this concept. Auditor is a watchdog, not a bloodhound. As a student, I used to smug up and then used to write this. And then we started working, we used to understand it little better, what it does it actually mean. But now today, this definition has changed. Auditor role is not just restricted as a watchdog. Yes, primary responsibility of auditor will remain same. It has not changed. However, the auditors have to shift somewhere in between. They are not supposed to be a typical bloodhound like an investigator, but at the same time, they cannot say that fraud detection is not our responsibility. Couple of years back, it was a very clear cut line that this is the role of auditor, this is the role of investigator. But with the growing problems in the company, the higher level of risk, the role of auditors have changed. There are worldwide ISAs which clearly talks about the role of internal auditor when it comes to fraud detection and fraud prevention. For example, there is ISA 240 and ISA 315. These international standards on audit clearly talks about what should auditor do while performing the audit procedures. Even if I don't go directly to a strong concept like a fraud, internal auditors do risk-based audits. But unfortunately, the understanding of the concept of risk-based audit is not correct. Risk-based audit does not mean that while doing audit, if you come across a risk, you should take care of it, or you should increase the scope of work accordingly. The risk-based audit is an audit where auditor identify the risk first, then draft the scope of work. So risk identification should not be done at a secondary step. It should be the primary step, and then design all your audit procedures considering the risk. This is called risk-based audit. If you are internal auditor, if you are engaged in risk-based audit, that means you have already entered in the field of investigation up to an extent. What is risk? Fraud is one of the biggest risks to a company. If a company says we do not have a fraud or we cannot have a fraud, that means maybe they're just closing their eyes. They're not looking at the fact yet. So as an internal auditor, we first have to understand the risk involved. Sampling is one of the very frequently used method we use in our audits. How will we decide what should be the sample size? So basic, very, a basic concept says, higher the risk, bigger the sample size. Higher the risk, lower is the reliance on management. Weaker the governance, higher the risk. Higher the risk, higher is the scope of work. So as an auditor, each time we are doing audit of an organization, please first look at the governance part. You may call it corporate governance or governance. I would put it in a very simple term called ethics and integrity of management. So remember, guys, ethics never flow from bottom to top. Ethics always flow from top to bottom. If top management is not ethical, there is no way the company can be transparent and ethical. If your boss says it's fine to give bribe, how much is the probability that lower management will not do it? If your boss says that I want sales to be achieved, I don't care how you do it, how much is the probability that the staff below will not do unethical practices? So each time we talk about frauds or risk, if you ask me, in my practical experience of consulting, I would always say start from top and understand the governance structure of the organization. If it is not transparent, if it is not ethical, if you think management lacks integrity, the risk is always higher. Even if you're not doing fraud detection, even if you're just doing internal audit, risk based audit, please understand the risk is always higher. Weaker governance, weaker control. Weaker control, higher risk. Higher risk, higher scope of work. This is how we should look at the risk-based audits. And remember, fraud is one of the biggest risk an organization can have. Even if management choose to believe that the probability of fraud is remote, you should not agree to it just because management is saying so. Correct? So the first thing we should keep in mind is understand the organizational structure, understand the governance, and then understand the risk. Role of internal auditors in fraud investigation is much higher than before, and the way we are moving forward, this will go up and up and up. If you are involved in audit, regardless of the size of the company, regardless of the nature of the business, regardless of the industry it belongs to, please see if you find any clue, any red flag which could be a potential fraud. Be mindful. Don't ignore. Don't think that this is not my job. You should always report it to the management. I wouldn't say that if you find red flags of fraud, start detecting it. You can always go back to the management and report. Whether management wants to hire somebody from outside or as an internal auditor, they want you to increase the scope of work or go for a special assignment, that is a different part. But our responsibility is to find those material red flags, report to the management. If auditor fails to do it, it may be considered as a professional misconduct. Right? So that is how we should look at it. Some of the case studies which we have seen here, I'm sure most of you would be aware about these cases. Do you know who actually raised alarm? Whether it was Telgi Stan, whether it was CWG, it was CAG, Controller and Auditor General. Their task is not to detect fraud. When they were doing their audits, they come across the red flags. They understood something is not right. So they raised the alarm. And basis their red flags, further investigations happened. So these are a little old examples, but very, very good example that how auditors have supported in fraud detections. Right? These famous cases, all of us are aware. Now I'll just pick up, say, one of the case study, and I'll come back to the role of auditors. Let's talk about Nirav Modi's case. These days, some news are coming again. So I'm sure you must be aware of what has happened in the case of Nirav Modi. We all have gone through the case study. Then you would have understood that Nirav Modi took a loan, deceived the bank, and ran away. But do you really think bank is a victim, whether it's a Nirav Modi case or Kingfisher's case? I disagree. Bank is not a victim. Bank's involvement is there. When I say involvement could be negligence or voluntary. I wouldn't comment on this whether it was voluntary or it was not voluntary because that's not known. But either case, bank has definitely given them a free hand. Correct? I'll just pick some example. I'm an ex-banker myself, correct? And I personally believe that even if bank has some kind of robbery, which is a very hardcore crime, some kind of insider involvement are always there. Think about a scenario that the cash is going in a van and the robbers come and do the robbery. How would they know how much is cash inside? Hypothetically, let's assume they did so much of an effort, did the robbery attempt, and in cash van they just found some 5-10 lakh rupees. It's not worth it, right? Not worth taking such a risk. But most of the time we hear these news that each time such attempt happen, there's a big money involved. The bigger question arises, how do they know? Who knows in a bank that how much money is going outside in the van? No customer, no outsider. Who knows it? Some of the bank officials are aware when will the money go out, how much money will go out. It's a very hardcore crime. But similarly, how can an outsider did such a big fraud and nobody in the bank was aware of it? Whether you talk about Nirav Modi's case, Kingfisher's case. So I would not say the bank is completely innocent. I would not believe that bank was entirely a victim. I would rather say bank was negligent, if not involved. In Nirav Modi's case, for years and years, there was no RBI audit, which is very unlikely for a bank like PNB. One person in the bank was sending the messages, swift messages. Internal auditors never got to know about it. There was no maker checker. There was no statutory auditor on year who raised an alarm on this. All these could not be coincidences. In Kingfisher's case, the operational red flags were quite a lot on paper. The losses were going up. The company's top management was changing so frequently. Why bank never bothered? Why bank never bothered to check whether they will be able to utilize the fund properly or not? So those are not all, coincidences. Somewhere they were negligent, somewhere they did not perform their task well. And that is why weaker internal control plays a very significant role in frauds. So coming back to this, when I say auditor is a watchdog, not a bloodhound, but now this definition is changing. Auditors have to move towards the role of bloodhound, if not entirely, at least partially. Even Company Act 2013, Section 143, subsection 12 talks about it, that if auditors come across any suspicious transaction or suspected fraud, they have to talk about it. They have to report. They have to inform. The Company Act 2013 also talk about board of directors responsibility when it comes to frauds. Now, if we go back to who has the responsibility of what, I would say the primary responsibility of fraud detection and prevention lies with management. The auditors, the investigators do not have a primary responsibility to detect the fraud or prevent the fraud. Correct? But it does not mean they do not have any responsibility. It may not be primary, but they certainly have a responsibility. Each time we auditor do any audit or even begin the audit, we should do the fraud risk assessment. Our fraud risk assessment should be more about fraud prevention, detection, investigation, and response. So fraud risk assessment talks about how a strong and independent internal audit function work. Prevention is always better than detection. If a company has a strong internal control, the probability of fraud automatically goes down. And auditors can play a very good role here in fraud prevention. A company who invests on prevention part doesn't need to bother too much about detection part. But still, despite doing bestest of the effort, there is still a probability that things may not go as per plan. So in those cases, fraud risk assessment should also have a provision of fraud detection. That if this happen, if any unwanted event happen, how will that be detected? Investigation, of course, is part of detection. Once you have detected something, you should go further, connect the dot, understand how these things work. And then response and prevention. So each time we come across any fraud, please understand that frauds have a tendency to get repeated. It's not something that it's gonna be happening just once in a lifetime. And if once you have detected a fraud, it will never happen again. It's not like that. So in these cases, there is always a probability that if controls are not set, if controls are not effective, those frauds can be repeated. So company should make sure that the proper response plan should be there and prevention plan should be there. I'll just come to an interesting point of response. Unfortunately, in Indian system, the corporate frauds are not taken very seriously. Though legally there are provision, there are criminal acts which apply, but on ground, the past experience says that corporate offenders just end up paying penalties. In some of the cases, even if they have imprisonment, it was very short term. For example, in Sattam's case. Now, why I'm talking about this? Suppose a company has a fraud. Somebody senior from the management was involved. Most of the time, that is my practical experience also with consulting, that particular person is asked to leave the company because company do not want this kind of person to be there in the system. So they say, okay, please leave. So far, it's fine that this person has left. But how would others in the organization get to know about it? If they will not get to know about it, they will also do the same. Company wants to make it hush. One, that they will not take a action, or if they take an action, it is a very close room kind of action. And another interesting aspect of it is, if that fraudster goes in another company and the ref check happens from the past organization, HR never says that this person was asked to leave because of this reason. A very standard answer what we receive from HRs are, this person left due to personal reason. How will we make sure that this person doesn't join another company and does the same? There is nothing which will deter him to do it. He has just changed the job. That's it. So that is something where a company should have a very strong response plan also. Response plan should not just be restricted to, detecting the fraud and making sure it doesn't happen more. The response plan should also be to set an example. Set an example in a strong way so that others do not do it. Right? So company should always have a very strong anti-fraud policy, and auditor should help creating that anti-fraud policy. We are not supposed to make it. We can always support management in creating a strong anti-fraud policy. If I go back to what is the key responsibility of internal auditors, they should examine any risk and internal controls within the company. Control should be both effective as well as efficient. When I say controls are effective, that means controls are there for all department, all division. In quantity, they are sufficient. But just because controls are written on paper, it does not mean it will translate into action too. So control should not be just on paper, it should be up and running. A small example. Most of the companies in travel reimbursement, the controls are set. So that means each time if I'm traveling for work, I have to submit a couple of documents for reimbursement, which will include my travel invoice, my boarding pass, and the approval that I traveled for this work. These are checklist driven tasks. So most of the organization will have the internal control set that these are documents which are required. But when it comes to action, HRs or whoever is the concerned person to check, they follow this blindly. What do you need? Boarding pass, invoice, approval. Fine. Once you give these 3 letters, you're done. Now let me tell you a small trick, how a fraudster can take advantage of it. I'm an employee. I'm supposed to travel from Delhi to Mumbai after 3 months. I was asked to book my tickets today. I'm aware that I'm going to travel after 3 months. So I have booked my tickets today. Since it's 3 months in advance, my ticket was cheaper. Now, 2 or 3 days before my actual travel, I will book another ticket for the same route. Now, this time ticket will be much more expensive. What I'll do, this expensive ticket I'll book, and after a few hours, I'll cancel it. I'll get the amount. Now I have got the invoice of expensive ticket. I will travel on my original ticket. I will have a boarding pass. I will have invoice, which is expensive one. And of course, I have a boss's approval because it's a travel for work. These 3 documents I'll give it to HR and say, reimburse. On paper, controls are there. On paper, checklist is being followed. Somebody has already done fraud. So the documents are important, but the implementation of those documents or policies is even more important. Correct? There could be 5 internal control strategies to prevent fraud. Detecting fraud with the risk indicators. Each time we see frauds, we always see the risk indicators. There's something called green flag and there's something called red flag. Green flag is a situation where we think everything is fine, all is well, all is well. But if you don't pay attention, the low risk will not remain low forever. Remember, what is low today will convert into medium to high risk in very quicker manner. So that is where it is important to look at the risk factor from the beginning. Even if you think the probability of fraud is remote here, right? So that is first thing we should start with. Second, continuous monitoring. The risk is a very dynamic factor. It can suddenly arise from nowhere and it can disappear just like that. So we, as an auditor, have to follow continuous monitoring. Then leverage artificial intelligence and machine learning. We are moving into an era, technology was always there with us for a very long time. Now we are moving into an era where technology is helping us in big way. We talk about artificial intelligence, machine learning, or any subset of it, it is supporting us in investigation or in day-to-day task like anything. So it's time that we leverage artificial intelligence and machine learning for those activity where human intelligence may not be required. Use our caliber for something which is much more refined. Let technology do the routine task for you. For example, artificial intelligence can help you identify the pattern, understanding the trend. It may not be able to tell you whether it's fraud or error. You do the task. Okay? So use these technology to create pattern for you, to analyze, for predictive analytics, for understanding the sentiments behind the words, and so on. And once you get that data, analyze it. Analyze whether it could be a potential fraud or it is just an error. The fourth is adopting an adaptive security model. The one way to look at risk is post-mortem activity, that what would have happened and then dissecting and so on. But wouldn't it be much better that if we get to know about the risk then and there only, real time? So let's move our internal controls or internal audit tool and techniques or procedure in a manner that on continuous basis, on real time basis, we get to know about the threats. Correct? And fifth, which is very important, is to maintain an effective internal control. Our internal audit is audit of internal controls, whether internal controls are there or not, whether they're up and running or not. So it is time for us to maintain effective internal controls. If we try and understand a bit more about what is forensic audit, even though we use the word audit, forensic audit is not a typical audit. Nowhere in our forensic report we use a word called "in our opinion." Investigation or forensic audit is not about opinion, it is about fact. It is about evidences. Correct? So forensic audit is an audit which is litigation supported. Each time we do an audit for legal purpose, for litigation purpose, we call it forensic audit. It's an examination and evaluation of a firm's financial transactions for court purpose. If we understand the basic difference between fraud examination and auditing, these are few differences. Audit is a routine activity, is a recurring activity, whereas fraud examination is non-recurring. It's need-based, as and when arise. The scope of audit could be general, but fraud examination scope is very, very limited and very specific. For example, investigation of cash from the month of May 24 to April 25. So very, very restricted scope. In audit, we give opinions, but in fraud examination, we affix the blame. The objective of investigation is to find the evidence, not to give opinion. If we talk about the concept of adversarial, whether it can be used in courts or it is about blaming someone, audit is not about it. However, fraud examination is about this only. The methodology we use in auditing is about using audit tool and technique, where in case of fraud examination, we use fraud related tool and technique, investigative. Each time we do audit, we follow a concept of professional skepticism. Something may not be right. That is called professional skepticism. Whereas in fraud examination, we talk about evidences. It is not about something is not right or something, no, but it is more about evidence, proof. Correct? So this is the core difference between audit and fraud examination. This is how forensic audit work. First we plan, then we use our tool and technique of investigation, and then we report. So this is the flow chart of forensic auditing. There are various ways how we can do investigation. The tool of technique could be many, which include cyber investigation, digital forensics, discrete information gathering, investigative interviews, and so on and so forth. So the fraud investigation tool and techniques are different. So these are some of the methods which we use in fraud investigation, which include interviews, discrete information gathering, due diligence, digital forensics, transactional analysis, data analytics, predictive analytics, use of AI, AI-based tools in investigation, and so on. So this is how we do investigations. Now, if I come back to the point, how audit and investigation is connected, once again, I would reiterate that the role of internal auditor is to do internal auditing. Right? The same typical way we do it. That is not their primary responsibility to detect the fraud or prevent the fraud. It is the primary responsibility of management to do it. However, each time an auditor come across any incidents of fraud, they have to investigate. Oh, sorry, they have to report. They have to discuss it with management, and they have to write that in their report. If auditors fails to do that, that may be considered as a professional misconduct, and that is not right at the part of auditors. So this is how auditors should get into their role of investigation. So that is my take on this topic when it comes to audit and fraud investigation. Though they are two different concepts, very, very different than each other, but of course there are a lot of connecting dots. They have a lot of similarity, they have a lot of linkage with each other, and that is my take on this topic. Now open to questions, anything you want me to explain further. So that's my take on this topic. So Pranav, anything you want to explain further, or any questions, etc. If you want to take.
So I will just see whether if there are any questions which are there in the chat box. Otherwise, we will continue with the session, and again at the end we will take the question answers.
So from my side, I think that was it. This is what I wanted to share about this topic.
5 minutes. If there are any specific questions, we Uh, yes, madam. There are a couple of questions which have come in. I will go one by one. Yes. How can internal auditors leverage AI technology tools in detection and prevention of frauds? Hello. Yes, ma'am, you're on.
Yeah. Can
Yeah.
you just tell me the question? How AI?
Yes, yes. How internal auditors can leverage AI technology tools in detection and prevention of frauds?
So AI-based tools can be used in a very good way, because each time we have to analyze the large amount of data or create a pattern of it, these tools can be certainly helpful, and it can reduce our manual effort. So if you are an internal auditor, you want to understand the pattern in the transaction, which you may find little suspicious. For example, sales has an exponential growth, or a lot of variations in the sale which doesn't seem organic. Those kind of stuff can be checked with the help of AI.
Okay.
The another very important aspect of using AI is that it can collect data from external sources also. So for example, your client belongs to a specific industry, and the sale is growing in a way which doesn't seem organic. AI based tool will also be able to help you collecting the data from industry. So how other companies of same size in the same industry are performing. That way you'll able to understand if this sale is actually real or it seems like a camouflaged. Just an example.
Right. And a follow-up question to that with the same question, like how the analysis of financial statements, like how auditors can use AI tools for better analysis of the financial statements in order to either detect or prevent the frauds.
So
That
as
could
we
be
just discussed pattern, so I
correct.
have already given, I think, answer of this
Correct.
sales. And another example could be related parties. So related party concept is a very complicated concept on job, on ground. With the help of AI based tool, it can help us collecting data from multiple sources to know if X and Y parties are actually related party or third parties.
Right.
Sometimes your client may say it's a arm's length transaction, it's a fair transaction, but with these tools you get to know that these are actually related parties.
Correct. Correct. One question, like types of fraud in FMCG companies, especially any frauds which are appearing in tea processing company or the allied activities. So, can you throw some light on that?
FMCG manufacturing related frauds are always on up. Inventory related fraud, inventory stealing may be difficult, but you can always replace it with inferior kind of stuff. So those kind of frauds are very, very common. And the another fraud which is very common is procurement related frauds. For some reason, for manufacturing, for FMCG, the purchase related frauds always tops the chart, because the probability of employees connecting to vendors, then starting their own shell entities, taking bribe, those kind of frauds are very, very common for this industry.
Right, right. Yes, okay. One question which is asked is whether can we place a reliance on artificial intelligence models which draws the data from various open AIs like chat GPTs, etc. So to how much extent we can place a reliance, or what alternative procedures we need to do to have a better comfort over the procedures?
So if you ask my opinion, I would say use the AI at this stage just as an assistant. So think from that perspective, that if you have hired an intern, all of us in CA firm have interns, how much rely can you do on their activity? So we always cross check, right? As a principal, we don't never blindly trust what our interns have done. So we cross check, we make sure that their data is correct, and then only we report to the client. Now, probably yesterday you would have heard about Deloitte's case, $440,000 case, correct? So what Deloitte did, Deloitte relied on generative AI too much. They were creating a report for Australian government, collecting data from multiple sources, but rather than doing it manually, Deloitte actually used generative AI to did this. And because of hallucinations, the report had a lot of citing of references which actually never happened. And that is where the government got alert that this activity never happened. How is it quoted in the report? So this is not only a financial damage for the Deloitte, but it is also reputational damage. Coming back to your question, please use AI just as an assistant. It's a black box. You don't know what logic this AI is using.
True.
So I remember as a student when I was in school, you know, my mom was teacher too. So she used to tell that if you are doing a working of a mathematical question, rough working should not be erased. Sometimes teachers see what logic you are using, correct? I'm sure many of you would have heard about it, that rough working in the copy should not be erased too. But that rough working shows what student is thinking. If your logic is correct, but your end answer is wrong, you may still get the marks. The problem with
Right.
AI is that it's a black box. We can't see that rough working. We don't know how
True.
they are concluding this. So that is why blind trust should definitely not be put in. And of course, clients' data sensitivity is another factor which we should keep in mind.
Absolutely, absolutely. Yes. One more question, which is if a fraud involves top management or the board, how does an external internal auditor or probably the AI can deal with it, or what steps the internal auditor should take as extra caution in order to detect such kind of frauds?
So AI, as I said, is just an assistant, right? AI
Absolutely.
will only do what you are asked. So let's focus on our responsibility as an auditor. If a company is a listed entity, then you have a shareholder, you have regulators, you have external stakeholders. As an auditor, as an external auditor, first thing we should do is to resign. And when you resign before your tenure, EGM is called, and EGM it is written why auditors are resigning.
Right.
So that's a
Indicator. One of the
opportunity
indicator.
to talk about it. Why did you resign? And also, as a code of conduct, we know that an incoming auditor always speak to outgoing auditor.
True.
Outgoing auditor can tell incoming why is he resigning. As an internal auditor, the first thing we should do is report it and discontinue working.
Right.
Remember, the unethical reputation of management rubs on to the reputation of auditor too.
Hmm.
So be careful on that part. AI
True,
is just an assistant, so use AI for you.
true, true, true. So I think we have covered all the questions. Let me just see if there are any more questions which have come up. That we have taken. We have taken. Hmm. This question seems to be little incomplete, but I'll just read out for you. Can you please throw some light on recent frauds in Gensol engineering? So I'm not aware that whether this is a complete question. So
So I would not comment too much on this case. Reason being, it is still under investigation, right? So whether it was a complete fraud or was it a negligence, since this case is not fully investigated yet, regulators, MCA and other regulators are still looking at it. Uh, I would refrain from commenting, on this case
right,
this stage.
sure, sure, sure. So I think we'll wait for a couple of minutes. If there are any more questions, we'll take up uh, and accordingly we'll see. So, yeah, this we have covered. This also we have covered. Okay, great. Okay, and yes, in the chat box also there are no specific questions as of now. Okay. Okay, there are no specific questions as of now. But thank you so much, madam, for such excellent and wonderful session. So, with the changing landscape for the internal auditors and with the rising complexity in the business process and transactions, I think the role of internal auditor has increased to a greater extent, like multifold, the role has increased. So, so from that perspective, it's indeed a very informative session for all of us to have more insights about that. And thank you once again for such a great and wonderful session.
Thank you
And
so
I
much.
would also would like to thank the Internal Audit Standards Board, the entire officials of Internal Audit Standards Board, the Vice Chairman and the Chairman of the IASB ICI for conducting such a wonderful webinar. And also, of course, once again, thank you to our today's eminent faculty for such a great learning session. Thank you. Thank you so much all.
Thank you so
Have a
much.
nice day. Thank you.